General advice, warning and disclaimer. Opinions, thoughts, research, recommendations and content presented are general advice only. They do not take into account your specific circumstances. Please consult a financial professional before making any investment decisions. For further information on our disclaimers and general advice, please see our website and our PDS.
Hey there, everyone. Welcome to this week's edition of Bulls versus Bears.
Hi, everyone.
Gentlemen, JT and Kai here with me. The young blokes are exhausted this week after, which I've got to say, I'm going to let them off the hook. They have been on absolute fire on the Global Alpha Rex this week.
Yeah, so, absolutely. We'll see. We'll actually see a result of that later on in the episode.
Yeah, absolutely. So I might even just give them their own podcast, to be honest, because I think they did about 5 trades this week, and they. But you know, if you keep winning, you just keep going, I suppose.
Oh, that's
so. So yeah,
when the house is paying, you gotta, while it's hot.
So no derogatory comments about millennials this week. We may have uncovered, a generational anomaly, but let's not go too far. But media this week. I had the call today, which was pretty interesting. Found a great little company, which I think we're seriously considering chucking on the high conviction list for the small caps. I'm not going to mention it. You'll have to subscribe to get that. But
and so just to not mention it again. Mark just gave me said, go have a look at this company, and I just went through a presentation. Went on YouTube. There was an actual the founder or the head researcher explained the what he was doing, and I was like, hey, this is actually a decent company, and there's a good catalyst in there as well. So yeah, absolutely.
Yeah, no, it's just nice.
But if you want to find out the actual name, then
it'll be absolutely. So got a members first policy. If Trump can do America first, we're doing members first. Yes. So less tariffs though.
Yeah.
What you were on with Zach Riaz, yeah?
Yes, I was on with Zach on the Monday. He was very bullish on 360. I mean, like, I'm a charts guy, so I was bullish 360 as well. Surprisingly, it broke out and has kept heading on higher. And the main thing was on the results. They actually talked about increased revenues.
Yes,
increased subscription revenue.
Oh. Yeah.
Actually, and beat it by 30%. So it wasn't actual, increase in users. It's actual, increase in money in the till. So
my criticism's always been, shareholder. There's no price to likes ratio.
Yeah.
And what was super worrying was like they're getting all these subs, and but the conversion to free from conversion out of free was only like 11%. And I'm like, well. And a lot of the existing, technology was existing, and the big boys have already got it. And I was like, why? Like, I know it's convenient, and my family put me on it, and my battery was going flat by midday every day. So I was like, that's probably a fair bit of user experience. I'm probably biasing my view, but when we spoke about it earlier in the week, it was like, we're recognizing the fact that it is difficult to get those subscribers if you can, and then you can monetize it. So I agree with that catalyst. I think it's still a dangerous as hell trade. I mean, that thing halved over it's one of those companies that it's still it's going to be profitable for like the last 3 earnings reports, but so it created in that move to the downside because there's no real reason to hang on. But they've But now I think if we went again, given that they're actually monetizing, that volatility won't be there as much because it's not just a story anymore. There's actually some dinero that's backing it up. So.
Exactly, and I we've had a chat with this. Basically, it seems like the governments all around the world are going all after the Mag 7 for anything. What's the actual term? When you're monopolizing
antitrust.
Yeah. So I don't think that that means that a takeover or a sort of a freeze out of that sector is possible at this stage.
I've got a theory on that. I don't think it's anything to do with any competition.
Uh-huh.
I think it's got to do with the fact that they pay 14%. They don't pay tax anywhere. So what they do is, they're all incorporated in Ireland or the Cayman Islands or whatever. And then there was an article in the AFR years ago. Australian Google did 65 million in revenue 1 year. And then Google Cayman Islands charged them $64 million software licensing fee.
Yeah.
So net, they paid tax on $1 million.
Mm-hmm.
And the Australian government went after them, and that's when Meta and stuff attacked them about the Australian government was stupid too. They wrapped it up in that pay for the content thing as well. Which kind of, they should have, one foot in front of the other guys, deal with one problem first, and then they bit off more than they can chew. And the Mag 7, well, those big global conglomerates just basically ran the same as how badly they ran the mining tax as well. Like, they just ham-fistedly handled a very good policy and just got destroyed in the media.
So it just shows as well, like it's a politics game. Like, if you control the media and you control the narrative, you can win an argument there. So
but there's a chance the population sides with. No one likes higher taxes.
Mm-hmm.
So if they try to tax them, it's like you might find that you don't get popular opinion behind you. But if you say any competitive and try to grind some money out of them that way, then I think that there's it's a little bit more palatable, and people are like,
Okay. So it's basically, it's an indirect. Oh, it's not indirect, but basically, rather than raising taxes, we're just going to fine you.
Yeah, basically.
To get money out of you.
Yeah, but I mean, one of the big reasons the US debt is in the horrible place it's in is that the 5 biggest companies in the world, just about, are all based in the US, and they pay 14% tax.
Mm-hmm.
No one gets 14% tax. Mm-hmm. That's crap. And I mean, how many businesses have corner music shops, bookshops, blockbusters, blah blah blah. There's basically one. There was one of those in nearly every town in the world, and all of those got shut down, and all of that profit got funneled back, and now they don't have to pay tax on it.
Yeah.
That's absolutely absurd. And the company tax rate over there is, I think, similar-ish to here. They ran that somewhere around the 30 or whatever.
Oh, I remember it was in the mid-20s, like 25. So.
But you're never gonna get, you need revenue, and the hole gets bigger and bigger. If we're not, it's not like they always go, it's going to be anti-growth and things, but it's like you're not asking them to pay a premium tax, but you're asking them to pay maybe somewhere between less than half and what everyone else pays. So we did that beta shares lunch. Remember, they were saying at some stage, because their margins keep growing because their tax rate keeps dropping, and they get subsidies as well. At some stage, there's going to have to be a conversation, because it just otherwise the US goes broke. They're effectively funding the owners of that stock.
Yeah, and I'll take another step on this. Is that the thing about the whole trade war is that the actual evil players in the game were the US corporations.
Yeah.
So they actually benefited from shifting all the manufacturing to China. China, like Trump says, if I was China, I would have taken that deal.
Absolutely.
Because it's like, okay, so you want to just ship all your manufacturing here, and we'll just do it at this price. It's not like they were like, you need to send manufacturing here. It's like basically Wall Street said, we want more profits, so ship manufacturing over there.
Yeah.
And that's that's the irony of the whole thing, is that now they want to ship it back. They realize it's actually a lot more expensive to ship it back here. And we've had a shake in the share market, and Wall Street's like, oh, no, we can't do this at all.
Now, whilst I'm loving this conversation, I've got 2 concerns. A, we're agreeing with Trump, and B, we're stockbrokers and we're getting a little bit socialist, so we better move. Markets want to move on. But yeah, no, and obviously stock market went up at 11 from 11. I'd reckon you've got to go the opposite this week. But bond yield's still high, but the stock market just didn't come flatly ignoring it.
Yeah, so I wrote, no, right, but there's an article there about rising bond yields. So the 10 years actually went over 4.5%, which is kind of like a psychological level. And the 30 years actually had a peak at the 5% level as well.
Yeah.
They had pulled back slightly, but in terms of what they bounced, it's
and bearing in mind 2 more basis points in the 30-year would have been an 18-year high.
Exactly. So that is the main thing. So I still think it's a bear market rally, but I still think that this, the fact that equities markets have rallied despite this shows that they both can't be right. One's gonna crack.
Yeah.
So I don't know which one's going to crack. So, but at the moment,
they had weaker retail sales last night in the US, and the inflation number was on par, which they count as a beat, because they have to, because they're always bullish, but they're they're cheering on rate cuts now. But what you've got to step back and go, you're cheering. You're not really. You can't be cheering on rate cuts because of economic slowdown.
Yeah,
that's because that ain't good for the stock market. So, but look, I still, I've said this over and over for a week and a half. Apart from inflation was benign, there's no payrolls is the big dog again. Trump's on a like a global positivity tour, and he's achieved world peace. He's solved 2 wars. He picked himself up a plane, which is highly illegal and against the Constitution, but he doesn't care. And everything's fine again. Until he lands back on American soil, positivity tour is going to keep the market up here.
Yeah.
And I think you're almost trading Trump at the moment. If he even smells like going,
almost. We have been.
No. But as in, forget the economic numbers. Him changing tone is if he starts to get cranky again and the positivity goes, I think the equity market, the rug gets pulled. But I think there's no genuine catalyst until payrolls, which is a late payrolls. It's like that. We don't get a.
So for 3 weeks away, is it? You say?
I think so. Sometimes they will. I don't know whether I've ever seen it released on the last day of a month.
I can't remember.
But sometimes, yeah. But it's in the second week of it's the second Friday of the month, which is very rare. So nothing. Everyone's going to be waiting for that number. Basically, Jerome Powell's basically said rates are going nowhere. The equity markets again ignored him, and so really not much has necessarily changed.
Yeah. All right. So
what's the highlights this week? Yeah.
You got the
I'll switch it over.
Okay, cool. There you go. So 3 stocks for the highlight. So 360. We've already had a chat, so that's actually busted out new highs. Appen, you had it on the call today. What were your thoughts?
So I basically it was up 22% today. And my immediate thoughts were have been for quite some time. That's my number one candidate for delisting for a big company. So it's not in its previous form or its current form. It's not an AI company. They human beings manually tag photos so AI can sort. So they clean data for AI. The problem is with it is, and the stats that I did was their competitive advantage was they ship those low skilled jobs to the Philippines and India. So you're roughly about $30 to $40 a day average wage in both those countries. India's a little bit cheaper. Philippines actually might have been. I mean, we're talking a monthly wage of $450 versus $650 in US dollars. So, but now that AI does that tagging job for you, you're competing against 1 cent per query. So they've lost that advantage completely because the machine can do it, and the machine there is no labour cost. It's just electricity basically, and it works 24 hours a day. and you don't have to manage HR and
That's
all
right.
that sort
It
of thing.
doesn't complain.
And it doesn't complain. It doesn't ask for a pay rise. So yeah, but they did
so
say,
is that a sell or then? Or?
Oh no, but they basically, but I mean, Blind Freddy could have told you that, but they actually addressed it today and said that they're now getting revenue from stress testing and verifying your large language models for people who are trying to develop their own.
Okay.
So they are going in a different direction, and they are starting to get revenue from it. But so basically, my call was if that works, if that new initiative does work, there's still a sell because they're a $3.5 million company with a $315 billion market cap that swings regularly into negative. So they're trading at the dumbest PE in the world. But there's still a sell, but they won't go to zero if the new thing doesn't pivot. If the new pivot doesn't work, they're gone. They will go to donut. So because they're but if you Google AI ASX AI companies, Appen is regularly top of the list. Okay. So people think it's an AI company. It's the opposite of AI. It's human beings tagging things. It's like literally what we invented AI for was to not have to do those jobs anymore. So but it's like I wouldn't put my worst enemy's money into it, to be brutally honest, because I just think why wouldn't you just go buy US tech?
Yeah, absolutely. And the last one, GrainCorp. So GrainCorp came out on Thursday with earnings. CEO talked up the company.
Oh well, so there's
or didn't didn't poo-poo it.
For an ag company, it was a marching band, but compared to a tech company, it was probably a dour outlook. He was like, he was less pessimistic. Is probably the better way to put it.
But either way, so GrainCorp did bust out to 7. I think it reached.
I literally just sold 785. So
there you go. So new highs again. So we have been long-term holders on that one. As it keeps going higher, we shall hold on. But if it does stall out, we shall move on to the next trade.
Yeah, basically, it is super undervalued, but that sector just will not get momentum. And as we found out, and I'm going to put my hand up here, it's my fault. You got to wait 6 months till the next earnings report. Otherwise, I
think you coined the line. Basically, like funds management is a popularity contest.
Yeah.
Same thing with the stock market. Stock market is a popularity contest. If you're not one of the cool kids, and you're not, part of the Mag 7 or one of the large caps, then you just don't get the flows. And I think that's the problem with the ag sector.
Yeah, well, I mean,
great companies,
but you get lured in by the fundamentals.
Yeah.
Like it's trading at 10% above asset prices, and there's a lot of evidence to say that their port assets are probably undervalued by 50%.
Mm-hmm.
So they should, they're probably trading at like a 30% discount to NTA. But you know what? If no one cares, it doesn't go up. So, bit of a lesson for me.
But what's the crazy for tree falls in the woods? No one hears it.
Yeah,
doesn't
exactly.
make a sound. And I guess that's the case with the ag stocks. And you can apply that to any stock that just doesn't move. Like unless there's actual money flows into it, the share price won't move.
And we talked about 360. It's the opposite. Like, you know what I mean? Like if you're the popular kid.
Exactly.
And there's been 2 stocks from the boys in the Global Alpha in the last 3 weeks where I haven't necessarily gone into the great detail, but I don't know what they do, but they're up 20% in like 3 days and then we're out. So does anyone care? They're making 20%. So
exactly right.
There quite often is a good opportunity in GrainCorp though, because their dividend doesn't get paid till July. And 1 or 2 situations in the past where you get the spike.
Yep.
Where I've sold and it's actually drifted back to where it was prior. And then you get and then you can buy back in and get the divvy. So statistically, GrainCorp actually rallies 8 out of 10 times on earnings apparently.
Yeah, that's a nice statistic.
Well, but
it works 120% of the time.
Well, yeah. But the other 2 times where you get stuck in it, it could be a while, as we just found out over the last 12 months.
Yeah.
So So Sayonara Grain Corp. But that probably does lead in pretty well for Elders in the next couple of weeks on the 26th.
The next one, I actually done a US page, so just click on.
Cool. And
there we
go.
So Foot Locker, takeover by Dick's Sporting Goods. Apple.
I thought you meant to say Dick Smith. Electronics, isn't it?
Dick's Sporting Goods.
Yeah.
Apple. So Tim Cook had a meeting with Trump. Tim Cook was saying that they were going to shift, I think, 25% of their production to India. I think they were going to invest $500 billion, and Trump said, no, I want those factories in America.
Yeah.
So that's why Apple's there. And last one, Coinbase got hacked. So I believe they're like the third largest exchange in the world.
Yeah.
They got hacked. They wanted $20 million. The hackers wanted $20 million in Bitcoin as ransom. They refused to pay it, and now there's
should have asked for more for hacking Coinbase. Oh my god!
Yeah,
these guys got money.
Yeah, but I mean,
they refused to pay it, and they've done. Coinbase have released a bounty.
Yes,
that if you can identify the hackers.
Oh, well played! I like it.
We will give you $20 million. So
that's unreal.
So there's been a reverse.
No, but look.
But that's what you love about crypto. There's always great stories there.
Yeah, I can't see BHP or CSL.
Yeah, that won't happen.
That's well played. I love that. But it's the only way we'll stop the terrorists.
Exactly right.
But they're
because the USA doesn't negotiate with terrorists.
No, well,
and I learned that off 24.
Yeah, and NCIS and every other show.
So that's could make maybe real life, may not.
Rightio, so heat map.
Yep.
And as I said, and I've nailed 11 from 11.
That's it.
Yeah, this is quite incredible. Nvidia up 14 and a bit. Tesla up 22. And it's been a good week to be a US equities trader. John Deere, I know it's only a little small one, reported earnings up 8% as well. I think that's through to new record highs. Mm-hmm. And the analysts are now finally talking about the technology. So it's
even Caterpillar. That's always considered a barometer.
Yeah, the economic bellwether. So, admittedly, though, both of those companies do manufacture in the US, so they've got momentum. But it's I think someone came up with a new term for John Deere. It was like machinery tech or something like that. Like it sounded stupid. That one.
Smart robots.
Pretty much. And Kai, United Health was so world's biggest healthcare company.
So they got a bit into trouble for Medicare fraud. So they've hushed the CEO. They've ushered him on. So a bit of turmoil there. But yeah, I think that's a pretty extreme reaction. 30%.
Well, no, but on top of the fact that it's down, it was already down about 40% this year as well. So that is for a company that was the largest cap healthcare company in the world to drop. Like it's not a biotech. They just do everyone's insurance and they own pharmacy. Like it's like proper bricks and mortar. It shouldn't go.
Yeah.
But the CEO you say the CEO was fired or
I think they moved him on. So.
Yeah. Well, better than the bloke that was head of insurance that got assassinated. So I think I'll take getting fired any day of the week. But they've been going. I mean, it's obviously a bit of a. I think a lot of people would have been thinking, "Oh God, it can't get any worse than this," and been long to the eyeballs because it's been a consistent performer for multi decades. So this maybe it's the puke. Maybe we dip out. We were looking at the healthcare because it smashed every healthcare ETF in the world because it's the biggest holding of every healthcare ETF.
Yeah.
The mindless green robot became the angry red robot. So
got to sell some of that.
But it won't. Now it doesn't have the market cap. It's not going to get the passive flows.
Yeah, exactly.
So maybe just take that as a lesson, CBA, one day. And obviously the healthcare companies still down because you keep making threats about healthcare. no one's very clear about the policy. I think he just said we need to get prescriptions down.
And that's it.
Yeah, but even in the Australian market, they've hit diagnostic companies that actually don't do drugs anyway, but because they're in the same sector, they're getting smashed. So, it's a bit of a bizarre thing.
Berkshire down. Oh.
Well, mate, Warren's playing golf, man.
Yeah.
Warren's gone, mate.
Oh, what are they going to do?
I did a LinkedIn post where with Warren Buffett and it said "open to work," the little, and I wrote some rant about, sadly he'd get resumes sifted with all your fancy stupid things, and it got like 17,500 views, and I'm like, and I didn't really, but experience counts. So and they're sitting on a bunch of cash, so I guess. You're probably defensive switching.
Yeah, so it'll be interesting because they have quarterlies as well.
Yeah,
I'll be curious if they managed to buy anything, or even
the quarterlies have been. There's another 40 bill in cash.
Just more cash.
It's more cash.
More cash. Okay.
So I'm with him. Sell the bear. I mean, he should have. To be honest, he should have. I would, but they're not ones to. He's looking for the Armageddon to buy. Mm-hmm. Because his time frame is like 100 years. So he's not doing the trades in between.
Yeah.
But next.
That's for next week. All small names. No.
And
I think this is RBA cash rate. We can have a chat about that. What's the market saying?
I think everyone's saying cut. I've heard mortgage brokers as well as real estate agents going.
No. Well, that's the thing. So. Ask
they're obviously talking their book.
Ask someone who owns a house or an investment property. We're getting rate cuts. Ask an economist who works in a bank that does mortgages. We're getting rate cuts. Ask an economist that's got a proper bond fund, and they're like, "Don't be ridiculous."
Yeah.
So employment was up. Employment was up another
80,000, wasn't it? On Thursday?
I don't know whether it was. I thought it was.
No, I remember.
Yeah, right.
I remember they were looking for 20, and they got something like 80s, or maybe 60s. It was a massive beat.
So and the average was already double the historic average of jobs added.
It was massive. Like,
just a thing. If it was 80,000, I've been a little bit distracted this week. I wasn't really watching that number. If it was 80,000, I'm telling you right now, there is no way we're getting a rate cut.
Yeah.
Like, not a snowflake's chance in hell, because but they always go, oh, but it's all government jobs. Like, what, the government doesn't pay?
So, but either way, like, it could be just like the last cut. Like, we cut, and all the bond yields
go up anyway. Yeah.
Go up. So, what's the difference with the wholesale rate? So,
so economics 101 is like, if you've got an employment rate of 4% and inflation doesn't really matter where inflation is, you're not cutting rates. Like, you don't, like, these guys have got to stop, like, reverse engineering their argument into economic policy.
I think also, like, Australia's so long property, and like, they're the biggest advertisers on all the traditional media, real estate. So that, they have to give the audience what they want. Like, they
some hope.
They're gonna push that narrative. So
and we just again stick to the historical averages, and we basically said late Q1. So we bang on nailed it, and we were saying that when did we do that dinner that we spoke at? Like, that was over a year ago, and we said because they took a survey. Because the averages kind of they work for a reason, and I got crapped on continuously. It's like, oh, you're such a bear, and I'm like, no, just like
this is just the numbers.
These are just the facts.
Yeah.
I can't see them doing it, but we won't make anyone who says that doesn't make the news. So you're 100% right.
Exactly.
No one wants to hear it.
So next, commodities. Oh, there we go. So gold has fallen. So it was holding a support around the 32.50s and broke that. Got down as low as 31.95. I'm still looking for maybe roughly about 3,000. If you get down there, I'm happy to buy.
Yeah.
One thing I have noticed is that the pullback in all the gold miners here in Australia has all stopped. Like basically, they've all started to bounce again.
But it was significant, though.
Exactly. So even though the spot price looks weak, the miners
spots come back 10, but Newmont's come back 20.
Yeah.
And Northern Star, it's pretty severe.
Yeah. So silver, copper, pretty steady. Copper was a little bit weaker. Crude actually bounced midweek because it looks like because of that trade deal. Bitcoin strong at 103.
Crude was actually up about 11%.
Oh,
and then because Trump's solving every single political situation ever, apparently Iran's going to be selling oil, so it dropped about 3% last night.
Yeah.
But yeah.
And the last one, bond yield. So I just wrote a little passage that 4.5 is a big level on the 10 years. So keep an eye on that. Oh, and also keep an eye on the JGBs. Like that's ticking on higher as well. So basically, the funding costs all around the world keep elevated.
So interestingly, and if I'd have been here to contribute today, I probably would have put this on a slide, but I'll have to explain it anyway. So Japanese bond yields are higher than the S&P dividend yield for the first time in multi-decades.
Okay.
No, so they were just flagging basically the Japanese have now got zero motivation to stay.
Exactly.
To
so
stay in US stocks.
why would you keep it in the Mag 7 or S&P?
Why would you risk equities?
When I just get it at home and get stick it in bonds. And they're the biggest bond investors in the world.
Well, exactly. They would prefer bonds than equities. So, I mean, but it was a actually incredibly insightful piece from the Financial Review because they're increasingly getting more and more just, you can tell. One of the articles today was, I asked the journalist has just given himself and goes, I asked GPT about what the superannuation tax policy would do to the Australian share market. He was the response. So they're not even trying to hide it anymore, that they're journalists aren't doing. So and iron ore's rallied this week as well.
Yeah, over 100.
So there's been no news in the AFR about and for AFR. It was a really good article actually, and it's a shame I forgot charting, but essentially, they were all out here and now they've come into here. So it's pretty. You'll get the picture.
Trade of the week. So we have a new service called Global Alpha. So obviously the US is the biggest market in the world. So and we do have access to the US market. So if you want to have some recommendations and actually invest in the US and get trades like this, give us a bell. But our Global Alpha team recommended TME, which is the Spotify of China. I had to look that up. Recommended $14. Entered it there. Came out and popped on earnings, $17. They trimmed it, so that was a plus 21% gain in a day and a half.
Green bars.
Exactly. So if you
that must have the aftermarket in it as well because it opened at actually opened at 40. But
either way, that's that was the trade of the week. So if you want to get these in real time, where we'll actually recommend it to you, give us a call.
Yeah, no, the boys, even our high conviction list in the global stocks with our buy zones is a 73% hit rate, win rate at the moment, on average up 25% across all of them, and none of them are down. So at this point, which sounds like we're fudging the numbers, but it's actually genuine. But the boys, the guys have been really. We've been watching this for a while, and we started it about 3 weeks ago. And, bear market rally is a great time to start. So I'd be disappointed if they had a loser, to be honest. But, they're 6 from 6 in 3 weeks. And I'm big, youthful exuberance. I'm telling them to pull their heads in. But, I mean, that's not there was a few before we started the service like Palantir where I started to go, well, you know what, maybe we'll just trade mining stocks only on the ASX and we'll do growth over here.
Well, that was the one where you said, you wouldn't buy that because it's the most expensive company in the world.
Yeah.
And it got more expensive by 45%.
Yeah. And then, but
in short space of time as well.
Oh yeah, and then it's a much broader range of growth company opportunities.
Yeah.
So whereas here it's just getting worse in Australia, and you can kind of make sense. Like I can't see us doing more ASX stocks anytime soon from a single stock basis. And I think everyone else, now you've got access to the US, I think everyone else is starting to realise the same, right? Like, why would you push like crap uphill? Australian companies can report earnings that knock it out of the park and lethargically go up. Like these guys, if the CEO even looks like he's got a smile on his face, these things go up 10% over there. So but this was a great pick. There was a couple of others. Was one they closed out in 2 days as well. Lift into earnings.
Lift. Disney was one.
Dash.
Oh, let's not give away all our secrets though.
No. They've taken. They've all near hit target. I think Disney.
Well, there you go.
So we're only giving away one Disney, and I actually quite like that long term anyway. So they're opening theme parks and they've kind of got their they're getting things together. So well, we might, like I said, because they're very enthusiastic. They probably I'll just start them off on their own podcast, I reckon. I don't know whether I could.
So I think Fear and Greed next.
No.
Oh no.
Kramer of the week. So I just wanted to back up your Bitcoin recommendation from last week, JT.
Yep.
This is the best bit of fundamental news you'll ever hear for that recommendation. Jim Kramer says that I can't believe people think Bitcoin will go to 200,000 this year. It's never going to happen. It's just not. So you'll have to adjust the target up to 200,000 in that Bitcoin thing, I think.
Absolutely. So
I never have I been more confident in the trade now. Old Jim, we sort of sporadic, but that just lined up. I was going to get you to do Bitcoin as trade of the week, but it was last week anyway. So, so there's a little bit of a positive catalyst for update.
Exactly. That's one of the best fundamental indicators in the world.
Shout out to all the people following CU6 as well. Just up a lazy 70-odd% in the last couple of weeks. On the recovery trail, but yet again, no announcements, nothing's happened. So, if you going to trade small caps, maybe just be aware that it can do whatever the hell it wants. So,
exactly. Yep.
It's Fear and Greed.
Oh, look at that! Almost extreme greed.
But remember, I picked 73.
No,
sorry,
you won 76.
Yeah. So,
there you go.
Yes. Yeah. No, we don't need to bring that up.
So one thing that I did notice, because I did it this week, but the put and call options are actually showing some greed. So the put call ratio is basically the amount of puts versus the amount of calls being bought.
So puts being bearish, calls being bullish.
Exactly. And
so the one the highest?
Yes.
Look at that there.
Exactly.
Yeah, that was when this thing was at extreme fear.
So what that means is that when the market fell in April, everyone wanted insurance. So the key with all of this is you want to have insurance before the fire hits.
Yeah.
But the funny thing is that once the fire hits, people still want to buy more fire insurance. So
yeah.
But now we've gone back to we've had this massive rally off the lows. People don't want insurance anymore. So that's just
we were selling insurance at that time, weren't we?
We bought insurance well before the house caught on fire.
That's exactly right. Yeah.
In fact, we over-insured and got paid out, and then got another house. But yeah,
Okay, so that leads us to the last bit.
No, that's where I paused. I'm like, this is.
Are you bullish or bearish next week? I am bullish. So just to show, I haven't looked at my track record, but I have been opposite Mark. I'm probably like 1 out of 11 in the last few weeks.
I'm going to stick with my bearish.
Oh, so one bear, one bull, and Mr. for 12 in a row.
Boy, you see, now I used to not really care when I used to be wrong all the time. Now I like. I'm really starting to feel the pressure. I think I'm going to go bearish for the first time in 4 weeks.
Oh,
but like not angry bear. as in like we're just sideways, just a little bit of heat coming out of it. I think that the market's just a little bit exhausted, and I think this rally's broken a significant amount of records. Trump's peace, love, and mung beans and trade deals tool is going to end. There's no more earnings, and even like.
So it could just be taking a break, basically.
I think I don't think it's any more than 1% or 2%.
Okay.
Like which.
But anyway, we'll write that down. See if we can get 12 from 12.
Yeah, but I'm pretty surprised it didn't go that because it's been a pretty bullish week.
Oh,
I'm so surprised that it went on an extreme greed, to be honest.
Yeah.
Like I would have thought the Mag 7 rallying as hard as it did, like, you know, Nvidia up 15, Tesla up 22, like Amazon up 10. Like I would have thought, you know, that warranted some extreme greed. But anyway, yeah, but we'll obviously we'll find out next week. I think we're going to be pretty quiet overall. So
exactly. So I think that's it.
Yeah, that's it, mate.
So thanks for listening in.
And yeah, we will see you next week. Goes on, and we will drag one of the young bucks on next week to do a bit more on the.
That's it. Look, whatever their next recommendation is, we'll get them to actually explain it.
Yeah, absolutely. So, and then if they do a good job, I'll shift them onto their own podcast. So
that's it.
All right, cheers, guys, and we'll speak to you next week.
Thank you, guys.